Welcome to the Money and Wealth Show, brought to you this week by AmericanManganeseInc.com. Here's your host, Sterling Fox.
Welcome to the Money and Wealth Show, where each week we offer you opinions on the economy, the markets, and business. And this week, it's a real pleasure to welcome back to the show, Rick Rule. Rick, good to see you again.
Always a pleasure. Thank you.
Now, you've had a change in job description since we saw you last summer. You were, at that time, the main man behind Global Resource Investments Limited, and your company has been bought out by Sprott. So now you're chairman of Sprott USA. Congratulations.
Thank you. Thank you. Proudly Canadian now.
Indeed, but tell us the difference, the way that Global Resource Investment, your old company, still exists, but within a different framework now, right?
Yeah, an interesting story. I've, of course, known and followed and admired Eric Sprott for 25 years. My business had grown fairly well, and we were similar businesses in that we were performance-based cultures, highly competitive cultures. I was trying to hire a man named Peter Grosskopf, who was president of Cormark Securities for a while, to come down and be CEO of my businesses. He went to work for Eric Sprott as CEO of Sprott Inc. and wisely said to me, "Can we continue our discussions from a different point of view?" And as I discussed it with some of my key customers and some of my staff, the tie-up between Sprott and ourselves became very obvious. The growth challenges that are in front of us for the next 4 or 5 years are growth challenges that the Sprott organization faced 10 years ago and knew how to overcome. At the same time, given Sprott's size, the U.S. market was their next logical target.
Sure.
The U.S. market is 13 times the size of the Canadian market in terms of investable assets, and it's less concentrated in terms of financial services organizations, and there's much less expertise available in natural resources in the U.S. market. So the next logical destination for Sprott's growth was the U.S., and buying us and using us as the footprint to expand in the U.S. market was very logical for both sides. When you combine that with the fact that the organizations have known each other and done business with each other for 2 generations, it was a very natural and very easy fit.
Describe for our viewers across Canada, Rick, what exactly it is your company does. You're in mining and development, and fill us in a little bit. You're a colorful guy.
Well, I would say broadly that we're a financial services business focused on the whole range of natural resources. In Canada, we're known primarily for earlier stage mining and oil and gas businesses.
Right.
But we also have an agriculture practice, a forestry practice, a water and water rights practice. So we're active across the waterfront, no pun intended, in natural resources. We have 3 basic business units: a brokerage firm, Global Resource Investments, a segregated accounts money manager, now called Sprott Asset Management USA, and a pooled account, if you will, merchant banking business that's fairly well known in the lower mainland of British Columbia as a consequence of its providing early stage financing to exploration companies, even pre-public companies.
You were talking about growth challenges, different ones facing different levels of the operation, yours being different from the parent company, Sprott, which is based in Toronto. What are the big challenges facing any financial operation going forward?
I would say that the big challenge for us is that our business was entrepreneurially led. I founded the business and I had grown the business, but my skills are more towards securities analysis than financial services business management. And the whole skill involved in the regulatory interplay, particularly the cross-border regulatory interplay, putting together relationships with other financial services institutions, platforms for securities transfer and holding, the whole sort of infrastructure of financial services is a very sophisticated business in and of itself. And the more time that I spent doing that, the less time I could spend adding value in a way that my customers have come to expect, which is doing securities analysis and negotiating private securities transactions, either debt or equity transactions. So this allows me to go back to what I really like to do,
right,
which is securities analysis. And it also allows me to go back to doing the business that built our company, which is performing for customers.
You travel a lot. One of the, I would imagine, just by that smile, one of the more enjoyable elements of your work is the fact that you literally get to go all over the world and examine mining potentials, correct?
Yes, of course. Get to is a strange word. As you can hear right now, I'm suffering from a cold. And the logistical part of traveling, of course, is a have to rather than a get to. But the truth is, the fact that I get paid to go various places and talk to people who are passionate about what they do is, to me, a source of unending pleasure. I joke with Eric Sprott that I'd probably do this for free if it didn't pay so well.
Exactly. But now, when you go to another country to examine a property on behalf of potential investors, how much emphasis do you place on the politics? Not necessarily what's in the ground, Rick, but the government, the infrastructure that happens to be, that ground is located in, and what that home field advantage may or may not offer a foreigner from North America?
That's a wonderful question. I actually recall our last interview last year at the Hotel Vancouver when we were talking about political risk in its various guises. I need to start by saying that I'm a resident of the People's Republic of California, which is an extraordinary risky destination from my point of view. It isn't regarded as risky because, of course, it's governed allegedly by the rule of law. But if you tried to build a mine in the state of California, you would discover what real political risk is. I think the important message that I would have with regards to political risk for your viewers is it's a function of price. Political risk in Western countries is often underpriced by the market relative to the reality of the risk. You'll recall the jurisdiction in Canada that probably has the best reputation for regulation and taxation was Alberta. And
yes.
Of course, if you go fairly far back, they invoked discriminatory taxes against Americans in the 70s and 80s. They had an excess profits tax. And then, of course, there was a provincial royalty. Last year, the Australians got in the game and tried to, as we discussed in our last meeting, tried to put in place a special mining tax.
Which you referred to quite bluntly as theft
Of course.
at the time, and I doubt you've
Of
changed
course.
your opinion.
I haven't at all.
Okay.
And I guess the takeaway from this is that your viewers shouldn't pay as much attention with regards to calculating political risk to the nightly news. There's this thought that if a government steals your wealth in English according to the rule of law, that the money is somehow less gone than if it's stolen in some other fashion by people that speak some other languages. But what I've learned myself is that jurisdictions treat you well when they need you. And when they cease needing you, they cease treating you well. So I would say, unfortunately, that political risk is absolutely endemic to resource businesses.
Sure, yeah.
You can't move your business. If you and I owned an oil tanker and the fees in some port got extravagant, we'd sail out of the port and never go back. Unfortunately, it's very difficult to move a mine or an oil well. So they're wonderful, wonderful targets for political theft.
Interesting. Our guest this week is the chairman of Sprott USA. It's a real pleasure to have Rick Rule back with us on the Money and Wealth Show, and back with more after this.
Always consult your investment professional before making any investment decision.
American Manganese Inc. has a world-class deposit in Arizona, indicated 6.7 billion pounds, inferred 8.9 billion pounds, potentially the lowest cost producer of electrolytic manganese. American Manganese Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at TalkDigitalNetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. Our special guest this week is the former head of Global Resources Investment, currently the chairman of Sprott USA. Rick Rule is back with us. And Rick, I'm very curious. Now, you are a Californian. Your state enjoys a population greater than that of Canada. And yet I think your debt situation is a lot more horrible than Canada right now. Talk to us about the state of affairs in the USA, especially the dollar, and where you see it all going. As a guy who makes a lot of money and spends a lot of time calling the markets for important clients.
Well, I wish I could give a more upbeat assessment of the U.S. economy. there are many things about the United States economy that are in surprisingly good shape. As an example, a declining US dollar is very good for US manufacturing. The United States still has the best highest education system in the world. The United States still has a wonderful residual social attitude towards entrepreneurship and entrepreneurialism. There are wonderful human capacities in the United States. Unfortunately, the math in the United States is not good. It's very difficult for me, although I don't have a PhD in mathematics, to understand how people add a whole column of negative numbers and expect to end up with a positive. The aggregate debt levels in the United States are unsustainable, and I'm talking about the on-balance sheet debt levels. The off-balance sheet debt, the future net present value of benefits due under Medicare and Medicaid and Social Security, are simply unsustainable, and nobody seems to have the political will in the United States to deal with it. If it were merely a federal problem, I suspect that given the underlying strength in the American economy that we could deal with it. The difficulty is that it isn't merely a federal problem. Some states, including the state that I live in, are in as bad shape as the federal government.
Sure.
And beneath that, you have an iceberg of municipal debt that's absolutely enormous, absolutely enormous. I joke, I live in North County, San Diego, in a town, ironically, that's very well run, Carlsbad. But we're a suburb of San Diego, which is broke. In a state, California.
Which is flat broke.
Which is broke.
Yeah, yeah.
In a country, the United States, which I would suggest is broke. We are enjoying, if that's the correct phrase, a postponement of the reckoning as a consequence of quantitative easing, as it's called. Quantitative easing, from my point of view, is a long word for counterfeiting. If the idea that debasing the currency is such a good idea, I wonder why Mr. Obama doesn't license me to do it. Why should he carry the whole load? Why should he have to double the U.S. money supply in 12 months? He must be tired with everything else he's doing. Perhaps he should give me a license to do some counterfeiting. I'd be happy to help him. You get my point.
I do. And wouldn't the Secret Service just love you for it, too?
They would. They would. Obviously, this is in jest.
Right. Just to backtrack a quick second, because we're these days enjoying a bit of exhilaration with the loonie being more than $1 US. And you said a few moments ago, I think the declining value of the United States dollar is good for manufacturing. How does that play out?
Well, obviously, a lower US dollar means that US goods are cheaper to buy abroad.
Okay.
And that foreign goods get priced out of the US market. If I were a manufacturer in Ontario, or if I were a manufacturing employee in Ontario or Quebec, I would be terrified of a high Canadian dollar. The Canadians had structural disadvantages in manufacturing against US manufacturers anyway, in terms of scale and also in terms of transportation cost to your biggest market, which is the United States.
Sure, sure.
The fact that the Canadian dollar has risen against the US dollar would make me, if I were involved in Canadian manufacturing, extremely uncomfortable. I recognize it's a wonderful point of pride for Canada.
Yes.
And I think it goes to the fact that the Canadian government has done a relatively good job managing Canada's finances since your financial meltdown in the early 1990s.
Right, right.
I hate to compliment any government, but I would have to say that I believe Canada is reasonably well governed, particularly relative to your competition. That may be damning you by faint praise.
By faint praise, exactly. But another country that you spend a fair bit of time in is Australia. Another country with a pretty strong currency that is, well, to say the least, equally proud of the success of the Aussie buck these days.
Australia is very interesting. I actually spend more time in New Zealand, which is equally proud, and that is really, truly perplexing. I believe New Zealand is a train wreck in the making. An export-oriented economy that has a strong currency is a self-correcting phenomenon. And unlike Australia, which exports things like iron ore and coal, where it has distinct cost advantages because of deposits relative to the rest of the world, New Zealand exports wool, butterfat, and timber, price-sensitive commodities. And when I wander around New Zealand and watch their pride at the high New Zealand dollar, I'm just very, very, very tempted to be very, very careful what you wish for.
Do you worry about the other side of the dollar conversation, the U.S. dollar conversation that we're having here, that there is a danger of the dollar essentially falling off a cliff, if you know what I mean? The decline being so dramatic that it's beyond being an advantage for pricing U.S. goods in the global marketplace?
I actually don't see that. The reason is the lack of competition.
Okay.
The U.S. dollar, a couple things I need to say about the U.S. dollar. I joke with Doug Casey that it's the worst currency in the world except all the others, because they're all phony too.
It's kind of like Churchill and democracy.
Exactly, exactly. The second thing about the U.S. dollar is that it's very, very, very liquid. And there aren't very many other vehicles that can hold flight capital. I personally wouldn't add to my U.S. dollar holdings, but it's a function of living in the United States. When you think about what your alternatives are to the U.S. dollar, you begin to get in trouble. Doug Casey famously called the U.S. dollar an I owe you nothing. And he said, as a consequence of 22 countries in Europe, the euro is a who owes you nothing. And if your competition is between an I owe you nothing and a who owes you nothing, it isn't really much of a competition. So in that context, what I see personally is sort of Chinese water torture, a gradual diminution in the value of all fiat currencies. Granted, the U.S. society is extremely competitive, so we're trying very hard to win the race to the bottom, but against stiff competition from other constituencies.
And that whole matter of declining fiat currencies, the paper money of the world, leaves us to a discussion about metals. Our guest is Rick Rule, the chairman of Sprott USA, and we'll be back to talk metals here on the Money and Wealth Show right after this.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol, MOR. Website, molycorp.com. Or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. We're in conversation this week with the chairman of Sprott USA. Rick Rule is with us. And Rick, just before the break, we talked about the global concerns that people everywhere on the planet are having about the value of paper money, whether it's the British pound, the euro, the US dollar, the loonie, whatever. And enough people are worried about it to the point where gold is now worth what, $1,450 or more an ounce, silver $40 an ounce, and people like your friend Doug Casey saying, you know, it's only going to go up, up, up. What are your thoughts?
I think it probably will go higher. I'm not sure it's going to go higher in real terms, but the fact is that if the denominator, the US dollar, is falling in price, it can feel like it's going up without it really, really, really going up.
True, yeah.
So I suspect that some of the rise that we've seen in gold
will be due to a declining dollar.
Exactly.
Okay.
I need to say one other thing, though. You know, gold isn't the riskless trade that it was in 2000 or 2001.
Why?
In 2000, 2001, it was a very lonely trade. The stuff was very, very, very cheap. There was nobody talking about it. From my point of view, it could only go one way.
This was about $400 an ounce gold back in those days?
$260, $270 an ounce.
Imagine if you can.
So I wouldn't describe the trade as one way. And the other thing that I would really caution your viewers about is I think we're headed into a period of extraordinary volatility. So that while the gold price can go up in the intermediate term and the long term, I think investors need to be prepared for real price volatility over the next 2 years, which means that you could see 10, 20, 30% increases and decreases in price coming very, very rapidly.
Now that's the price of the finished metal on the world market?
Correct.
How about mining stocks, the companies that actually dig this stuff out of the ground? A safer bet long term?
No, not at all.
Okay.
Mining stocks, I think, will give you volatility on steroids.
Oh, okay.
They'll give you more upside and they'll give you more downside.
So how does a person navigate these treacherous waters in the hopes that with all of the other volatility going on planet-wide, they can just get through it all and possibly even have $1 or $2 left at the end of the day?
That's a great question. I think most investors' chief investment risk is east of one of their ears and west of the other. The first thing that somebody needs to do is think, not react emotionally, because emotional people get used by volatility rather than using volatility.
Sure, you bet.
Volatility is a very good thing. It's a series of sales. If you remember to buy the stuff when people are in panic and sell the stuff when people are in euphoria, you will do well. In specific answer to your question, I think investors need to own some physical gold, because in times of turmoil in the past, physical gold has performed relatively well.
For thousands of years.
Own it and pray it doesn't make you any money. Secondly, because if it does, it means that the rest of your life is going to be very chaotic.
Okay, that's true, right.
With regards to the mining stocks, particularly with regards to people who live in Western Canada, you have access to information, so use it. The truth is that most junior mining companies will never make it. The performance in the market isn't conformably aligned. It's concentrated in a few names, and it's very important. Of course, people who watch your show are in effect self-selecting because they're already investing in their education by watching your show. But you need to do that. You can't buy the mining stocks as a group. It's a mistake. You have to focus on ones that you think have a reason and a way to perform. Very, very, very important.
All right, and if that wasn't enough, in just a few seconds, Rick will have the final word.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Looking to advertise to targeted audiences? Online at talkdigitalnetwork.com or howstreet.com. On television, The Money and Wealth Show. And on radio, This Week in Money. To learn more about getting your message in front of our audiences, email us info@howstreet.com or call us 604-699-8600.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
And now, with a final word on today's show, here again is Rick Rule.
One word of warning I'd like to leave your listeners is that the private sector is always more efficient than the public sector, even when it comes to counterfeiting. My belief is that the Canadian underwriters can turn out phony share certificates even faster than the U.S. Treasury can turn out phony dollars. Remember that most junior mining companies are worth nothing. All of the performance is concentrated on the best issuers. So be very, very, very selective, despite the fact that you and I both believe the gold price is going up.
Rick Rule, great to see you again. Thanks for coming by. It's just a pleasure to have you on the show again. Sprott USA, and their website is easily found, and you're now the guy in charge. And congratulations and the best of luck on that new assignment.
Thank you.
Our thanks to Fritz and the gang here at Churchill's at the Holiday Inn in North Vancouver for the hospitality. And for the Money and Wealth Show, I'm Sterling Fox. See you next time.
The Money and Wealth Show has been brought to you by AmericanManganeseInc.com.